Hi, this is Matt Kennedy from Pop Sequentialism. You've probably seen me on other comic-centric shows like Keep It Thorough or Reggie Collects and a few other shows that I pop into from time to time. And I haven't posted a video on my own channel in a very, very long time. And a lot of that is because I feel like there's something to be gained by having multiple voices in the room. You can get kind of an extreme on one side, an extreme on the other side, a voice in the middle. I have tried very hard to remain about as close to the middle as possible with my views on where the hobby is at and content and those types of things. And not a lot of things rile me. But I wanted to be sure to comment about something that I've seen in the last couple of weeks. And I think it was really all sort of kicked off by a video that Swagglehaus posted in which Mickey interviewed the Reserved Investments podcast host Shawn Surmick. And it's a good video, and I think you should watch it. And honestly, you're not going to get a lot out of this video if you don't go and watch that one. Because this is kind of, in a way, a comment about it. In some aspects, it's a rebuttal. But I think that it's important for me to start with the fact that I think Shawn is a really smart guy. I think that he's coming at the information that he posted, the opinions really about information that he posted from his own history in the business, what it is that he does for a living. He is an investment counselor by virtue of what he does. And so I think that gives a really specific approach to collecting comics, to collecting anything. He goes beyond just comics. He's speaking about investment in kind of large terms, or terms writ large, that cover, portfolio diversity and things like that. And I felt it was really important to give a kind of different take on those things, because I think that there are multiple ways of interpreting these things. And obviously I felt so strongly about it that I'm posting my first video in several years on my own channel. You can go and read my columns at Go Collect to get a sense of my content. You should absolutely go to my website, which is popsequentialism.com. There'll be a link in the video below, in the comments below. And you'll sort of see where I'm coming from and why I write about what I write. And I don't write weekly. I'm not a regular poster, because there's no need for me to be. I don't make money from doing this. When I post, it's because I feel like I have something important to say that I want to share, and that's why I'm making this video. And while I'd very much love to be doing this video on someone else's channel, where number one, I think it would get a heck of a lot more views, because I've dedicated almost no time to this at all in building up my own channel. But I think that there's a fun to the back and forth of having a perspective and having somebody, inquire or, even challenge on some of the statements. So again, I recommend going to Swagglehaus's YouTube channel. Check out the video that he did with Shawn from Reserved Investments. Watch that first. It's about an hour long. It's great content. But I wanted to start with a couple of things. And, I had made a comment on that video, and I had said that I thought that Shawn was coming to this as an antique dealer, and he responded saying that he's not an antique dealer. And so I apologize if I'm mislabeling him in that aspect. He does talk a lot about antiques. He writes a column in Antiques and Auction News. He talks in the interview about diversifying collectibles by mentioning sales in antiques and those types of things. So it could be a tomato-tomato situation, but I'm going to honor his wishes and instead refer to him as an investment counselor. So, which by definition he may not be, but I will say he is somebody who gives investment advice and he charges for it. So, I think that he says that collectibles don't have underlying fundamentals, which is that there's the value is more intrinsic, that there's not an underlying scale by which we can assess on any given moment the value of a thing. And that isn't absolutely true, but it's not untrue either. We do have websites and apps that collect data, that provide fairly up-to-date value assessment. And it's not, microsecond, like on the NICE or the NASDAQ. But it's possible that if there were a will for that to happen, that it could happen, that you would see tickers that have up to date evaluations based on recent sales, the way you see on, say, a financial program, whether it's on Fox or MSNBC or what have you. And I believe that a collectibles exchange is imminent. But I digress. Shawn provides the S&P and stocks in particular as an example of an easy cash flow asset, while pointing out that crypto, gold, and collectibles are not. But unless you're selling stocks that are absolutely on the rise, there's going to be no more assurance that those stocks sell for what the quoted price is than selling, a comic book for what the stated fair market value is on an app like Go Collect. And the truth is that a lot of people don't sell when their stocks are going up. They sell when their stocks are going down. And I'm talking about the vast majority of people who own assets in the stock market, not day traders, not people who consider themselves very active traders. That accounts for a relatively small amount of people who have investments in the stock exchange. And so I think that when we think of things only in terms of how the most successful people in the stock exchange are conducting business, then we're really forgetting probably the people that even Shawn has access to. I don't know that he's giving investment advice to people in the top 1% who are contacting him and saying, hey, I've got all these stocks, I've got all these properties, I've got these cars, I've got racehorses. I want another diversity investment because when I was a kid I collected comics. What should I buy? Maybe he is, but I'm guessing that it's probably someone a little bit below that top 1%, and people who have expendable income to invest. And so when we hear things like investment in, and I come at this from the fine art business. I was an art dealer for years. I'm still running Gallery 30 South as an online entity and doing occasional in-person curations in various spaces. But having been in that business for years, I think, when we would talk about investment art 10, 15 years ago, we were talking about artwork that started at about $10,000 and went up from there. These days, it's probably $20,000. So when you're looking in that space and talking about investment art, that's what we're talking about. We're not talking about someone with a couple $100 or a couple $1,000 or even $5,000 who's buying comics to put away, hoping that they become worth money. And I want to get back to that because I think that there's a very different mindset between people who are investing in stocks and people who are choosing to put their money into things like collectibles. So I'll circle back on that. But I wanted to say that when he mentioned crypto as an example of, an asset that doesn't have underlying fundamentals, he's just flat out wrong. Crypto trading is virtually identical to the stock exchange. Trades cost 8 decimal points less than a percentage to make a trade. You don't need necessarily a broker to make a trade. I know that you don't need a broker to make a trade in the stock exchange either. You can use things like E-Trade, but there's always a percentage taken. There's never any, you can't just sell somebody Bitcoin without there being a transaction fee, just as you can't just kind of sell stock certificates without there being a record of the stock sale. And that record is what costs you a percentage of that sale. Whereas with a collectible, you can ostensibly put an ad in a recycler or even just enter into a free chat group on Facebook or put a Craigslist ad or what have you and just sell it directly to somebody. You can walk into a comic book shop and ask if the owner wants to purchase it from you. Now, you're probably not going to get fair market value from that, but you can conduct that transaction without an interloping fee. And so I think that when we hear people talk about things and only give the upside to these other more established ways of investing, that we belittle some of the benefits, the underlying benefits of dealing strictly in collectibles. There's also, and I think that perhaps when he said crypto, he may have been thinking NFT, and crypto popped into his head. And if you were to substitute NFT as an asset, as a collectible with no underlying fundamentals, he would have been 100% correct. We've seen a very volatile NFT and crypto market. They are different things. And so I don't want to put words in his mouth, and I do want to give, because I think he's a smart guy, that I think that he perhaps misspoke. But in case someone heard that and took it at face value, I wanted to be able to dispel that aspect of things. So, and forgive me, I have some notes here that I'm looking at. It was an hour-long video, and I made copious notes about it. So I think that, you know, another aspect of Wall Street investing is that money left in an investment account that is not invested in an actual stock gets taxed very heavily if it is left uninvested. So, whereas if you are buying and selling things using your PayPal account, leaving money in your PayPal account, it doesn't get taxed sitting in your PayPal account. It becomes an asset when you file your taxes at the end of the year as an accountable form and resource of value that you're holding. But just by virtue of being left unspent, it doesn't cost you anything. And so by buying and selling things on various markets and even eBay, while eBay does take a percentage of the sale, having that money uninvested, just having it in a PayPal account and not moving it to a bank doesn't cost you anything. If you have a Schwab account and you leave money in an investment account, whether it's a money market account or otherwise, the longer that money is in there, you're going to lose you're going to lose your balance. It's going to go down because that cash isn't invested in the market. You're better off pulling the cash completely out, and then when you want to buy a stock, and of course this only works if you're not a day trader and you're constantly buying and selling stocks, but you can put your cash into the account and then make your purchase and spend all the cash that you're putting in the account to make the purchase with. So I wanted to draw attention to that because it's a very, very important aspect of what can be, to a layperson, seem crazy. So, another really, really important aspect of why we see so many collectibles go for so much money is because the people that are at the top percent that are buying Action Comics #1 and Detective 27, yeah, sure, there's a certain amount of very, very wealthy collectors who just want those books. But a lot of people who are buying, and especially the new money that came into the hobby, that started setting really high and we'll say crazy record prices on these things, and now in the last couple of weeks we've seen those same books sell for a lot less than they sold for last time they sold, are people that are they're looking at collectibles as a tax-free asset until sold. So if you buy a collectible, you don't have to declare the value of that collectible. It's money spent. It's no longer money in your account. You're not getting taxed on that money in the account. You're not paying dividends on it the way you would on a stock portfolio. It is off the board until you sell it. So if you want to hide $10 million and not pay tax on it for a while you take a moment to decide what you want to do with it, putting $10 million into collectibles is better than putting that $10 million in a property, which is going to get taxed via property taxes of the state, better than putting it into stocks or bonds, which get taxed as dividends, better than leaving it in a savings account. You're also going to pay tax on the savings that you accrue. And at a certain level, if you have a lot of money, then you're going to be paying way more money in taxes based on what you have in a savings account than if you just took it out of the bank and stuck it under your mattress. So, I mean, in a way, the collectibles market supplies that high value individual with a means of kind of putting their money into a time machine. And so they can wait it out. If they need to liquidate and the market's bad, it's no worse than if they needed to liquidate and the market was bad on Wall Street. They can ostensibly take their time to bring those assets out and sell them when they're more valuable and not less valuable. And even losing money, if it's not too much, might be a better plan on a very high dollar asset than the amount of tax that they would have paid on it otherwise, depending upon interest rates and those things, when they get into the market, when they pull it out of the market. So that was never addressed in this conversation with Shawn, and I think it's a very, very important aspect to discuss. So, that's a plus. That's a plus for collectibles. That if you are somebody that has a lot of money and you want to kind of hide it for a while, you can do that. Now, I'm not giving you tax advice. And I think it's kind of crazy that this is one of those few hobbies where we have to have a preamble and talk about these things, and I'll address that in a few minutes too. But you know, are there people, at the top with no fundamental love for comics and cards? That's what I'm talking about. So yeah, those people do exist. And are those people overpaying? It seems like yes, that perhaps they have been overpaying, but they have multiple motivations on top of just owning a comic that a collector would want to own because they love the hobby. And so those are two very different motivations. And so I think there was a little bit of kind of crossing the wires in Shawn's conversation with Mickey because there seems to be talking about a little bit of the motivation of one buyer versus the motivation of another buyer without differentiating between those two very different types of collectors. So, I think that if you underestimate those, then you misunderstand what motivates the absolute top of the sales pyramid in the collectibles hobby. And that's across the board, whether it's comics, whether it's Pokemon cards, whether it's a Mickey Mantle rookie, all of it. I think that a lot of the people buying those things that are buying them in, we'll say, the quote-unquote investment capacity are doing so to take their money off the board for a little while. So, I think another thing is this. We're looking at prices today based on where they were about a year and a half ago. So at the top of the market. So people who bought at the top of the market are seeing stuff go way, way down in price. And everybody's favorite example is, the variant 1 in 50, I believe it is, Ultimate Fallout number 4. And, there were people that were paying close to $50,000 for that book at the top of we'll say in the middle of the pandemic and when prices got really, really, really high. And now some of those books are going for less than $20,000. So you're looking at a massive loss. Now, I think that a lot of what was motivating that book is a little bit different than what is motivating, that buyer that was buying Action Comics number 1. And I think that you're talking still about two very different pricing plateaus. Someone who can afford a $50,000 comic and someone who can afford a $100,000 comic, that's two completely different asset classes. And then to go from a $100,000 comic to $1 million comic is another very, very different asset class. These are different buyers. So those people that were investing in Action Comics number 1 probably aren't the same people that were investing in Ultimate Fallout number 4. And I think a lot of those people that were buying those Ultimate Fallout number 4s, and I'm talking about the variant, that they were people who had gone from being casual collectors to being sort of the day trader equivalent of comic book collectors, where they wanted to get that book, sit on it for a little while, and sell it because they saw it going up and up and up and up and up. Once having seen that established pattern, they felt like it was going to go on forever, and they just kind of got caught without a chair when the music stopped. So again, I think that's a very, very different person we're talking about. Because I think if we think about the most expensive thing you'll probably ever buy in your life is a house. The second most expensive thing is probably a car. And so when you buy a car, a lot of people don't pay it off in cash. They do a 5-year kind of payoff plan. When you buy a house, it's a 30-year payoff plan. So you're talking about the most expensive thing that you're investing in. You're paying off for 30 years before you actually own it. Now, a lot of people will, they'll do a sale while they're still paying it off and take the money and put it towards what they owe and pocket the difference and walk forward, maybe reinvest, maybe buy another house. Certainly that happens. But I think we have to appreciate the patience that is involved in long-term asset accruement. And so to look at something in terms of it being a different price a year and a half later, to me is silly. And so, we see, anybody who's invested in a 401k plan or a cash deposit account, they have more patience than having to see results on something from year to year. There aren't many blue chip or lesser keys that are worth less now than they were, say, in 2018. So go before 2019, put a 2 year buffer on when prices started to go really, really crazy during the pandemic. And certainly the most transient books, the most traded books are still worth a hell of a lot more than they were in 2018. And that's a mere 5 years ago. So when you take, again, that's like the life of a car purchase. We're not even in the life of a cash deposit account or 401k or a house purchase. And so, another thing that Shawn discussed was like this safe 5% return on a diversified stock portfolio. But I mean, let's face it, those aren't bulletproof either. A whale investor can come in and buy out an entire 401k and dissolve it. It happens all the time. It wipes out people's savings. There are so many retirement funds that have been purchased by someone purchasing the company and breaking it up into parts, and those people are kind of left with nothing. So they're really, this idea that there's this reliable 5% thing that you can invest in is sort of a myth of the past. I mean, it used to be you could open up a bank account and get some pretty good interest just by leaving the money in the bank and collecting, interest on it by not touching it. And that slowly got turned into pushing it towards 401ks and cash deposit accounts. Now, savings accounts, return very little. If it's even 1 or 2%, I think that would be a very, very high amount. And again, you're going to be subject to the value of the dollar, right? The value of the dollar is going to ebb and flow. Collectibles are an international concern. So it's not just tethered to the dollar, it's tethered to who wants it and where they live. So, an important difference, an important aspect that makes it different than, a bank account. I think, to a really bigger degree, that aside from that 5%, diversified stock portfolio not being bulletproof, 5% return is for chumps in the collectibles trade. I mean, in my entire history as a collector who was selling the things that I collected, and I'm a few years older than Shawn, so I'm 52. He's going to be 47. So I've got a little bit of a lead on him, and I don't say this as a humble brag. I say this more as a confession. But every time, if I look at every transaction I've ever had, I think the only time I ever lost money on any collectible that I ever purchased at all was something that cost me $120, and I ended up selling it for under $100 as part of a massive submission to Heritage. I should have waited and held it back. I sold it too early, and I recognized that, but I was kind of like doing a great purge, and this was part of it. One book. I've owned tens of thousands, not hundreds of thousands of books. And I'm talking that almost every single transaction has yielded at least a 25% return above removing every cost associated with it. So whether I sold it on eBay and had to remove eBay fees, deducting PayPal fees from collecting a PayPal payment, all that stuff, taken off the top, still clear 25% at least on all of the collectibles I've ever purchased. Now, I did sit out a lot of 2022 going into 2023. So I kind of got lucky in selling a massive collection, and it was one of the few, I would say, investment grade purchases I'd ever made, and that I'd spent $20,000 on it, and was able to flip it for more than double. So that's important, and not for nothing, but it's a lot more fun to own something tangible that's connected to something that you love. And if you love comics, then owning comics and having them in your hands, I mean, even if it's in a slab, and which makes it easier to resell, of course, but like the love of comics, like there's absolutely nothing fun about owning stocks. Nothing. There's nothing that makes you feel great about like, holding it. I mean, in my case, at least, I mean, I'm sure there's some people who are excited by looking at a ledger. I had a conversation with a friend a couple years ago who talked about collectors that their entire collections are in storage and they just pull up an Excel file and that makes them happy. I don't think most collectors are built like that. I begrudge them nothing. I love that they get joy that way, but there's really nothing super exciting about, owning stock on a ledger in comparison to owning something tangible that you can look at and hold, and that looking at that can connect you back to a sense of nostalgia that brings you back your youth. And so I think when people say nostalgia, a lot of times, and especially people who have, investment channels, they say the word nostalgia like it's a dirty word. Nostalgia is magic. Nostalgia is something that it's amazing that you can quantify because it's so much bigger than something that you can actually, tangibly touch. And it is connected almost 100% of the time to something you can tangibly touch. So to dismiss the joy that nostalgia gives one, that's its own value. And without kind of, getting too far ahead, because the value of nostalgia is different for every single individual person. But I can break that down. So, and I think it's also important in looking at where prices were, say, in 2008 as opposed to where they are now. Let's look at something, something modern even, because, Shawn said he's not touching anything that isn't Golden Age. And that's fine. It seems like a pretty safe bet. He talked about how, certain collectibles and antiques age out. They absolutely do. But I think that involves a very definable difference in why things went sort of obsolete before as opposed to now. And I'll get to that in a minute as well. But, I think that obviously getting a 200% return on something gets much more difficult when you're talking about dropping $1,000 as opposed to buying a lot of inexpensive things that become much, much more valuable. What I love about the Keep It Thorough channel, and I appear on Thorough's show with fairly regularly, is that he's always talking about like really dollar bin books that he thinks are a good idea to pick up, and he points to things that are keys that aren't being called out on things like Key Collector. And so I think that sure, over time it's easier to make more money off of those lower price books. I'm a huge fan of the $200 to $300 book. I think that that's a really good kind of jump off point. It's low risk. I also don't collect like an investor. I don't kid myself. I'm a collector. I like this stuff. I like owning it. And if I buy a collection that has stuff that I want and stuff that I don't want, I'm going to sell the stuff I don't want. Some of it I may wait because I think that there's longer term value to them. That there's an investment of time involved in that. Knowing a movie may come out and then selling it on the hype of the movie, which is becoming, less and less as fatigue sets in. But, look at a book like Edge of Spider-Verse #2. So if you're looking at, that mortgage example I gave of 30 years and constant growth, go buy an Edge of Spider-Verse #2 in 9.8 today for, say, $860. Which is what you can buy it now with the shipping on eBay as I make this video. That's postage paid. Lock it in, bring it home, put it in a safe, leave it there for 30 years. Is there any reality in which human beings are still on this planet, we haven't had a fundamental society collapse, where that book isn't worth at least $3,000 after 30 years? That book. That first appearance of, Spider-Gwen, Ghost Spider. And at those prices, at the top of the market in 2022 or 2021, the highest paid price for 9.8 was $2,000. So even that guy is going to be made whole again when that hits $3,000. And I'm just setting that as a very low bar. There's potential for that book after 30 years to be worth a hell of a lot more than that. So, as more books appear, and, Shawn addresses this, that, as older collectors die off or they hit 60 and they decide to sell their collections, a lot of books that have been off the market are going to enter the market. But a lot of those books are going to be Silver Age, possibly Golden Age, and Bronze Age. So stuff that's been off the market, the stuff that was supposedly bulletproof, that these smarter collectors are buying, may become more common and less valuable. Whereas we know that the print runs on modern books, and we're not talking about the Copper Age, which is when, print runs went through the roof. But like modern books like, your Edge of Spider-Verse, those are, very popular books of their era and still much less were printed than the big banger books of the Bronze Age. So they are legitimately more rare. But that's only going to make sense if they're in high grade, because so many of those books were slabbed straight out of the gate, because this is in the era of graded collectibles, of slabbed comic books. So, remember, when you sell things through a broker, they're going to tell you to sell stuff when it's valuable, because they get paid when you sell. So, the longer you hold on to something and the longer you get value out of it, unless you have to sell it, it's going to have ebb and flows, right? Things are going to go up and they're going to go down. I mean, this is just the way things are. Nothing is a 45-degree angle straight, all the way up. So, if you look at it that way, the time that it takes that quote unquote safe investment to reach, where it's actually going to cause you agony, and I'm going to get into that right now. I think that when you look at the whole GameStop saga and how, a lot of people who were really felt screwed by the stock market, felt like there's no way to buy in, there's no way to really make money, that it's just like these guys at the top make money. You have to have a buy-in of like, $100,000 to get into one of these really high-yield mutual funds, and sometimes $1 million. So like the only guys getting really rich in the stock market were already rich to begin with. It's really hard to go from zero to nothing, and if you do, you're doing constant analysis. It's its own full-time job. It's very risky. And so you see, the ebbs and flows. The GameStop saga drew attention to the fact that regular people don't trust the stock market, they don't understand it, and that frustration steered people towards non-traditional investments. And so, that's what kind of launched the whole, comics, cards, and crypto, super, top of the level market. And you can look at people like Gary Vee, who started out as a Pokemon card dealer and then got heavily invested in NFTs, which, right now it's really hard to assess, what's going to happen with NFTs. I think that there's probably still some good investments out there, but really the money that you saw getting spent were people that spent no money on the crypto that all of a sudden got valuable. So they were playing with Monopoly money. It wasn't real to them. So, they were spending crazy cash because that's what they could buy. I mean, I remember in the 70s watching Wheel of Fortune. They didn't just give you money. You had to go shopping with your winnings from the game, and you buy like gift certificates from places I'd never heard of, or like lamps that cost 10 times what they should cost, so just to give people something to purchase with their winnings. And that's kind of, to me, what crypto was with regard to the NFTs. That people that had a lot of crypto, that had accrued a tremendous amount of value, wanted to be deemed cool among other people that collected crypto. And it was kind of this really small club. And then it got bigger as more people got involved and the prices got crazy. And by hype, they got people involved buying things like, Bored Ape Yacht Club and, other not very good art that, I don't understand the value behind. I'm sure you don't either. But, when you look at things like original comic book art, and you see that things are starting to go digital and artist proof. I mean, at least an artist proof is a physical asset, and it is signed, and comes with some kind of certificate that will tell you that it's unique. But traditional comic art seems like a very, very good investment. I think that it's still very, very undervalued. And as I pointed out before on my appearances in other people's shows, during the fires in California, I know a lot of collections went up in smoke. Some of the best comic book collections, but really a lot of the best art and anime collections also were burned and ruined. And so when we see numbers on the census for the amount of collectibles that are supposedly out there, those are off by at least 10%, I think, across the board. And then there's also people that resubmit. So you send something to DC, it gets a 9.2. You're like, how the hell did this get a 9.2? This should be a 9.8. And you crack the slab. Maybe you give it another clean, another press, and you send it back, and it gets a 9.6. You do it again, you send it back, it gets a 9.8. So that book is now counting on the census 3 times. It's one book, same book. So, when we look at scarcity on the census, we have to take that into consideration, that the numbers are off by a bit. And I think 10% is a safe estimate almost across the board, but that it could be much higher on certain books. especially books that are very hard to secure a 9.8 as people try and get them towards it. They resubmit and get from an 8 to an 8.5 to a 9 to a 9.2. So, you know, again, you know, it's like someone who's an investment counselor is getting paid to tell you where to put your money. And I don't think there's anything sinister about that, but I do think that regardless of whether they're right or wrong, they get paid. So that's something to consider, right? That's an important aspect of this. You know, another fundamental question, and I spoke about this at the beginning, is are collectors fundamentally really seeing this as an investment, or are they just catching a nostalgic buzz? Because that's not a valueless proposition. As I said, nostalgia has value, and here's how. So the joy in owning a comic or a toy or a card that you wanted desperately when you were a kid, but you never got it, or you couldn't afford it, or you missed the boat on it, you know, or any other numerous criteria that can add into why you didn't get to own it. When you finally track it down, whether you bought it for, let's say you bought it for $1,000, and let's say you sell it for $10 1 year later. So, you know, common wisdom and an investor mindset would say you just lost $990. But let's look at that. You've reaped the benefit via the joy it gave you for just $2.71 per day. That won't even buy you a cup of coffee, but it's joy because you got it and you catch that buzz lasts. In this case, the buzz only lasted for a year. Sometimes that buzz will last for 10 years. Then what did it cost you? I mean, that is a nebulous expense at that point. You're talking after 10 years, it's 27 cents a day or something like that. I mean, 27 cents a day is easy recoup. But now let's think about it in the opposite way. So you own a stock. And a stock, as I said, has never given anybody any joy. Selling it might give you joy, but the actual owning it really causes you anxiety, right? Because you become obsessed with the value of that stock. You agonize over it. And like I said, it's never, you know, an angle straight up the hill. It's got all these peaks and valleys where it changes value. And every time it drops, if you're aware of it, if you're monitoring it to any degree, you get this knot in your stomach. You get anxiety. And that is another thing that you have to assess by value, by tangible value. What does it cost you? What is the cost of anxiety? What is the cost of misery? So now, if you buy it and you sell it and it's like, let's say you bought it for $10 and you sold it for $1,000 a year later. So again, not a 45-degree angle. You will have made $2.71 per day. Doesn't buy you a cup of coffee. You know, how much did you spend on aspirin riding out that storm? How much did you spend on liquor or drugs or whatever it is that you needed to deal with the stress that this particular stock trade gave you in 1 year, you know, to go from $10 to $1,000? And you'll brag about it, you know, at the end of the year. Oh, I bought this for $10 and I sold it for $1,000, not taking into consideration the cost of that roller coaster ride on your health. You know, so sometimes you really do take it with you, just not in the way that, you know, classically we mean when we say that. So, you know, one thing that that Mickey does on the Swagglehaus channel is he does these charts that chart the life of a collector. I love the video that he did that, and it showcases how a lot of people start out as just simple collectors, but then they become like online dealers, so that they start buying and selling, you know, to get the stuff that they want. So a little bit more of a sophisticated collector. Then they start becoming a kind of professional seller of comics, probably online. Then maybe they get a brick and mortar store and they become a dealer, you know, and then maybe they get even larger than that. They open more than one store and they become a volume seller. So, you know, that's a really great way of following a particular possibility of entry into the hobby and exit in the hobby. A lot of those shop owners and investors become influencers. I think a lot of the people that are kind of well known on YouTube own stores or work for stores. So like they're in the middle of that journey as they become influencers. Now you see a lot of people saying, "Oh, I'm selling my collection. I'm selling my personal collection." This is the worst time to do that. So if they're telling you that they were investors and now they're selling their personal collections, why did you ever take any advice from them? I mean, really, right? So, they talk about the fact that, the pandemic created a lot of collectors. It also created a lot of influencers, right? Because people had spare time. But the curse of specialty is that your content becomes forever tethered to this one small thing. And so as the appetite for that thing expands, you either do well or you face fiercer competition. And as the appetite for that, gets tighter, then your views and the ability for you to make a livelihood off of that type of thing also gets smaller. So, there's going to come a time when, the conversations are really about the hobby itself rather than the being in the hobby. We're already seeing that. That's like every channel. That's what this conversation really is, right? But, that person may get bored with this content and pivot off to something else, or they may, choose to start making scripted content instead of, having these conversations, and they may just leave YouTube altogether, but they're going to find more joy in something else and they're going to move in that direction. This is called growth. This is what happens, to be, sort of unhealthily obsessed with the things that we collect as children for our entire lives in every aspect of our lives is probably unhealthy. But hey, if it gives you joy and it doesn't damage anybody else, power to you. I'm for it. I talk about comics. I collect comic art. I go through a lot of different phases where I sell a lot of it and I keep a little bit, like that my enthusiasm is connected to a general enthusiasm. If you are an authority on something, you want to be an authority on something that people respect. And so like for a time, people were respecting comics. Seems like they're not respecting it anymore. So, there's less value in that. And that's going to affect who stays in the hobby for sure. 100% for sure. But, when Shawn talks about, kind of the collector mentality, and we can see that there's a trackable pattern. He mentions, this is 100% true, by the way, that people that are in their 60s and 70s tend to sell off their nostalgia. But those people in their 60s and 70s, they're boomers. They're not Gen X. And they're certainly not millennials. So we don't really know if that's a replicable pattern. We don't know that Gen X is going to do the same thing that baby boomers did and sell off all of this nostalgia. There's a great sort of paradigm that has been used in the antique world. I also dealt in antiques sporadically across, my time in dealing in collectibles and comics and cards and that type of stuff. And Napoleonic furniture was it was all the rage in like the late 70s and early 80s. And so this is the pre-internet. This is the swap meet hunters. They all had their eyes peeled for this stuff. And to a certain degree, there was also, Chesapeake Bay, like Federalist furniture as well, which is actually kind of still collectible, but it's gone through peaks and valleys as well. The collector base that was paying top dollar for that stuff was old, and they died off, and there was no next generation to come and pick it up because there was nothing cool to young kids about Napoleon. And so there was nothing cool about that style. There wasn't a particularly good movie about it. I mean, now we have a movie in the theaters right now, and it doesn't seem like it's doing very well. But it's sort of beside the fact, because now that Napoleon movie gets greenlit because there's kind of a fascination with antiques of that era again. With millennials, with younger, the tail end of Gen X, that they're, for whatever reason, interested in that stuff again. And so there's a market for it. Now, it's funny because it's a really particular group. So there's a lot of kids that grew up in families from Eastern Europe, from, the edge of the Levant, who have a respect for this kind of style. And for a while, and especially in the 90s, that style was seen as being very gaudy, as almost being unclassy, and the trend was toward mid-century Scandinavian design, this really stripped down sort of functional design motif. And so mid-century furniture went through the roof. It got crazy expensive. It's still very expensive. And so, but you have to recognize that there's a demographic of wealthy 20-somethings with what the previous generation would call bad taste that love this gaudy stuff, this Napoleonic stuff. And so it's coming back. So just like Bucky and nobody else ever staying dead, no collectible ever stays dead. It comes back. It's all cyclical. And you can look at kind of the 19-year cycle, and there's been people who have spoken very intelligently about that, and you can Google that. That's not what this is going to be about. But it's possible. My point here is it's possible that Gen X and millennials and Gen Z have been inundated with pop culture since birth, their entire lives. And so they're choosing it to be their lifelong aesthetic. We know in the art market that collectors tend to buy art that reflects them. So when people were criticizing the Silicon Valley wealthy for not buying art, it's because nobody was making art that aggrandized them. It wasn't really, they kind of like grabbed onto street art because street art was seen as cool and they wanted to be seen as cool. But really what you need to have patrons is an artwork that reflects their generation, their experience, so that there's bragging rights in owning it. So that's why you see toys, and you see toy-influenced art like Cause. That's $20 million statues of toys. That generation grew up around toys. And so a $20 million toy is ostentatious. There's bragging rights in that. People know it. They know it's getting memed. People take photos of these things when they're out in public, when they're in museums, when they're in hotels in Las Vegas, when they're at an exhibition in the World Expo or at Art Basel. So that influencer class, these people that take an endless amount of selfies, are helping to promote the value of that work among their peers and the people who follow them. They may never own that stuff, but they've done their job in establishing a value for it. And so there's no proof or even indication that the previous habits of previous generations are going to be replicated by the generations that follow. And it's a dangerous assumption that that's the case. So to focus only on Golden Age, and some people aren't even, Silver Age is too new for them, by not thinking about, well, who's got money right now, who's becoming wealthy right now. Certainly the economic times of the last few years, and we can even say since 9/11, right? But afterwards, the housing collapse of 2008, it's been a slow climb back. So that, we haven't had a lot of extra income, except in the last couple of years where everybody was broke and was like, well, the heck with it. I'm going to buy what I want because I'm swimming in debt. I'm never going to be able to own a house. Real estate's too expensive. Like all these concerns that you have as you become an adult and you were sort of expecting things to be the way it was for your parents and it isn't, that leads what interests you. That leads what you invest in. And if you can get joy from a collectible, count that joy as value. It can be diminishing value just as a car is, but I think it's funny that, like I alluded to before, we all make these videos and we make suggestions and we have to say things like, oh, well, I'm not an investment counselor and, I'm giving you my take, but this doesn't count as, advice. But when you walk on a car lot, the guy selling you the car doesn't say, the second you drive this off the lot, it's decreasing in value. This is a constantly losing proposition. No, they don't tell you that because you still need to get around. And when you buy a house, the bank that loans you the money to buy that house doesn't say, are you really sure you want to do this? Because there's absolutely risk involved in the real estate market. No, they don't. So how come we have to say that when we're talking about collectibles? Why is there this obsession with the fact that, people want this stuff and they're willing to pay for it, but we have to kind of pretend that it's an investment for us to enjoy it? You can just enjoy it because you want it. And there's a value that you can put on that, and there's a fair market value that is established through websites that track these sales. Yeah, sure. So Go Collect doesn't track Comic Link. Big deal. You can look at the value on Go Collect, and you can look at past sales on Comic Link and you can figure it out. Like a really important factor and a contributing factor to why I think that nostalgia is an ever renewed resource is the sale of vinyl records. That vinyl records are now outselling CDs for the first time in history within the last couple of years. So who's buying these records? Kids without record players. So they love the format. They love the idea of a 12 by 12 inch piece of art. I love that the kids call them vinyls. We just call them records. But there's usually like a digital code that comes to the records. They can open it up. They can pull out those liner notes, which is like the most magical part of owning a record, is looking at the liner notes and listening to the music. And some people will say that vinyl has a warmer sound. I mean, I'm not going to get into that argument. I love CDs. I think that a digitally mastered CD has an amazing sound, and especially if you have a good stereo. But the kids are buying the records because they like the idea of it. They love the nostalgia of it. To them, that's like their grandparents' generation. And kids tend to have more respect for their grandparents than their parents. And so their collecting habits are built that same way. Like I say, like a 19-year type of thing. Granted, not everybody's having kids at 19, but like it marks a generational difference. And so now, honestly, even CDs are back. Like CDs there's a whole article on CD nostalgia, was just in Home Media Magazine, or a Media Play magazine, Media Play News. So, you have to look at this stuff. They made the argument in the show that kids aren't reading comics. That's such a lie. Kids are reading comics more than they've ever read comics, but they're reading manga. So it's a different format. It's not a 22-page floppy raw comic. It's a digest size. It's thicker. It's more bang for your buck, honestly. But to say that kids aren't reading comics, that's just not true. So, are we going to see a change in format? Like with manga sales being at their highest levels ever in the United States and probably still in Japan, will we see a change in format from 22-page to digest size manga? Probably. Will that kill interest in old comics? No, of course not. Because like I say, kids are buying 8-track tapes, and spending money on them. People are buying cassettes. Cassettes are very provably an inferior form of listening to music than almost any other form of music. It got popular in my generation because you could make your own playlist. Now kids grow up making their own playlists. They can make them digitally, but they're still buying cassettes because they like boom boxes, because boom boxes are cool. So, I mean, you kind of have to look at this intelligently. And I mean, you can look at numbers and you can stick your nose into spreadsheets and say, well, this is what I've gained from the past 40 years. But that doesn't take into consideration who's going to be here for the next 40. And when you don't look at that, when you underplay the fact that, millennials seem to have that same collecting bug that Gen X had, and when you look at the fact that, we can look at superhero comics and say that interest in superhero comics is waning. Sure. But in the 1950s, superhero comics weren't a big deal. People were buying horror comics. They're buying romance comics. They're buying funny animal comics 10 years earlier. Like these things, in a way, superheroes have lasted a really, really, really long time. They're sort of like, they've lasted longer than any other format in comics to be on top. So it makes sense that it's going to take a dip and kids are going to get interested in science fiction, which seems to be, and combat comics of people that aren't superheroes, that they're going to be interested in other things, Daniel Warren Johnson and Do a Powerbomb, extremely popular floppy comic. Would that have been even bigger if it were a manga-sized release? We'll never know, right? But that, I think, would have been the more intuitive way of release. But people who create comic books, classic comic books, have a love for that format, and that's why they do it. So they may not be making the best financial decision for their own, pockets by marrying straight into that format. And so, like I say, even if floppies go away in favor of manga, and you see manga getting graded in CGC slabs, that doesn't make the previous comics less valuable. It makes them perhaps more valuable. Now they're seen as an obsolete collectible. So, never underestimate, the power of pop culture. There were 2 hit Elvis movies in theaters in the last 16 months. So you had 2 movies about Elvis, a guy who died in 1977. whose last hit records were in the early 70s, whose like glory days in the 1950s. And who's going to see those movies? Young kids, not people who saw Elvis when he was alive. So I think you have to understand that everything is a risk, and I mean, I see kids buying VHS tapes and like they're obsessed with VCRs and they're watching VHS. Again, like the cassette, a very visibly inferior format, but it has its own aesthetic and they love that aesthetic. Kids like lo-fi stuff. They're kind of mystified by it. It has a magical kind of power to it, the way that maybe music boxes did to kids that are maybe the generation just a little bit older than me. It was sort of this archaic thing, but music boxes were huge. You couldn't walk into a mall without finding like a store that had nothing but like, nostalgic figures, little porcelain figures that said like world's greatest dad or happy birthday or whatever, and music boxes and cards. And these stores were like around for years. Again, they went through, a curve where I don't like to dust stuff, so I can understand that you start collecting those types of things and it kind of tends to own you more than you owning it. But, it's not an exception. It's the point. Everything's a risk. Walking outside is a risk, but we still have to say, take this with a grain of salt. It's like, well, of course. But I think that when we speak on these things, we speak on these things in a way that says if your aim is to make money, looking at the market as it is in this very moment, this is what I suggest. And when you follow advice, you have to look in and see how much work did that person do. To Shawn's point, that if that person's just looking at Go Collect or just looking at GPA and they're just spitting numbers at you and like, well, it looks like this is going up, and they're not examining other market conditions, well, then you get to learn over time whether or not they know what they're talking about or whether or not, they're just a stuffed shirt that are just giving you regurgitated information. So you do need to judge the source of your information and, judge people by their wins. Like if someone's giving good advice on a regular basis, then listen to them. But also, you're responsible for your decisions that you make with your money. So if someone says buy, Ultimate Fallout 4 and you do and it goes down in value, I mean, it's still going to come back up at a certain point. The second Miles Morales enters a live action Spider-Man universe for Sony and Marvel, that thing goes up again. It certainly goes up from where it is now, and it's never going lower than it is now. The variant, that is probably true of the variant too. I think we're seeing probably the basement price on that. That's not a book I'm going to buy. I'm not going to spend even $16,000 on that book because I'm not a baller like that. And that's not the part of collecting that excites me. So, I mean, you have to, be aware that people are going to collect what excites them, what they like. And that is, that's not investing. And I think that we get, caught up in that collectors feel like they're investors when they're really not. And I think they should be a little bit more honest with themselves about the fact. Really, they're saying that to their partners who maybe don't have respect for the fact that they're collectors. Happy wife, happy life, people say. What would I know? But, it's, again, everything is risky. What's riskier than a glazed donut? But when, you walk into Dunkin' Donuts and the kid in a paper hat sells you that donut, he doesn't give you a speech on your well-being. He just assumes that you know the risk. And so I hope that when people are looking at, the idea of investing in comics, that they know that there's inherent risk in everything. So I wanted to be sure to cover that. And, it's, you could say that, well, in a way there's a warning because when you buy a house, you buy a car, you have to buy liability insurance. And that's an interesting aspect of risk. And certainly I would say if you have a large collection of collectibles, you should be buying some kind of insurance to cover those purchases. Again, I want to say that I think Shawn is a really smart guy, and what he had to say makes sense in his reality, but I think he's speaking from a really specific reality. And I think we tend to make assumptions based on our own, pejorative take on things. And to me, when I hear people say diversified portfolio, I hear that spiel. I mean, that only works when it works. And let's face it doesn't work all the time. It's all craps. Like in the grand scheme of things, dropping little bets across a craps table is a waste of money compared to the one that actually hits. It's this kind of kidding yourself thing of like, I really believe in this, except I don't. So like if you've done your research and you come up with the idea that Evangelion #1, is an underrated value comic and you've got a budget to invest, is it smarter to buy one copy of that and then diversify it across a bunch of other comics? I mean, you snatch up as many copies of that one thing that you think is going to be a winner, especially if it's a low buy-in and it looks like there's no way it can go down. I mean, it can, but, we have information that would say that that's probably a pretty safe bet. Hang on to that for 10 years. When they finally announce a live-action Evangelion film at some point in time, that isn't, made for Japanese television, then, that book's going to go bananas. And, I mean, it's also a really good comic. So, like, if you have nostalgia for the anime, then owning that comic is like this totem that's a hell of a lot cheaper than buying a cell from Evangelion, which is absolutely cuckoo prices. And you never have to worry about vinegar syndrome on it. Like, I got out of animation cells from that era because they're in the next 10 years, they're going to start hitting that needing restoration kind of timeline where the colors are going to start to drop out and you're going to start to get that smell because the materials were never meant to last. I mean, comic books that were produced in the era that the Evangelion comic book were produced in were built to last. I mean, not forever, but I mean, certainly multiple lifetimes. So, like, when I hear people say, like, you need to diversify, to me that sounds like I don't know what I'm doing, but it feels less risky. And that is a dangerous religion because it's all risky. So, let me look here at my notes a little bit more. And I'm going to wrap up really shortly here. I don't want to have a video that's longer than the original one that I'm talking about. I'm kind of creeping in on that, but I'm going to wrap this up. So, again, like I say, if you're at the investment level, and like I said, you're talking $10,000 or $20,000. I mean, that's a cosmic ton of Evangelion #1s. So you're not really talking about that. You're talking about much more valuable stuff. And also, and I don't want to be disingenuous in saying that I think that that's what Shawn was saying. I think Shawn is saying when he's saying to diversify in your collecting is that it's different types of investments. So not this comic and that comic, but a little gold, a little Apple stock, a first edition Catcher in the Rye, Shock Suspense Stories #20, a Larry Bird and Magic Johnson rookie, an original Keith Haring print, painting if you can ball that high, John Romita splash page, and maybe some savings bonds. That's what I believe he's saying, and I don't want to put words in his mouth. But I think that when he's talking about diversifying, he's saying don't put it all in one collectible because these markets fluctuate, and if one market crashes and all your money's in that market, then you have nothing else to play with. And that is good advice. But I also think that, don't be precious about it. Like at the end of the day, are you really investing or do you want this thing? And do you want this thing because you want it and you think it's going to be more valuable? Then then the added value is maybe it becomes more valuable. The immediate value is that you bought something that you wanted a lot. So let that be, the intrinsic value. But, there's obviously, like I say, we have a market. It's only a matter of time until it's trackable in the same way that the NASDAQ is. One last thing that I wanted to cover, and then I'll wrap this up, is Shawn also mentioned in the video that right around 2000 to 2001 was the tipping point for bringing investors into the hobby. And I think he names it because that's when CGC started grading comics. I think the fact that CGC started grading comics in 2000, 2001 is important. That's not when the market got, invaded by speculators. Speculators came into the market in the 1990s and helped cause the bubble that crashed when companies got super greedy about gimmick covers and all that other stuff. And honestly, at the end of 2001, we had 9/11, and that crashed the stock market, which absolutely decimated collectibles. That really the smarter way of looking at it is that the bubble was caused, in 1993 with the death of Superman and Robin. That really catalyzed outside investors getting into it because they saw these news reports and like, oh, I used to buy comics. That sounds like something that's going to be valuable. A lot of those didn't turn out to be so valuable, but it did bring in people from outside, some of them buying entire long boxes full of one comic book. And if you look at, it dies again. Like it comes back in 2000 a little bit, maybe. It dies again in 2001. It bounces back hard in 2004, and it stays solid through to like 2008 when the housing, market collapses. So, I mean, we're going through a really provocative and volatile shift in markets, a lot more than we ever had just within the last, we'll say, 23 years. And I think it's important to recognize that there's been a lot of volatility. But CGC entering the game is pivotal, and that has made it easier for wealthy people to hang on to things and then resell them without risk of them degrading as much. I don't think it's as pronounced as it was for cards. And I think it's a lot less risky than it is for toys. Certainly, as you see video games and things getting graded, that the criteria is weird because that doesn't even guarantee that the game works, which is an important aspect of owning that particular type of collectible. If you sell a toy that's supposed to do something and it doesn't do it, that's not a mint toy. So not taking those things into consideration, you're really only dealing with the aesthetic value of it and not the original value, which is, I guess, true of comics. Because if you can't read it, what good is a comic? If you can only look at the front cover and the back cover, that assesses, at best, 1/22nd of what's intended, or really 1/11th. And, in a 100-page giant, you're talking about, 1 in 50. So, I mean, we're used to it now, right? But, the threshold for assessing value, and where it becomes inherently interesting to investors is when the Wall Street Journal covered comics as a collectible, and they didn't really weigh in until 2011. And they did so again in 2013, and basically pejoratively, to say, that, comics are selling for big money, but the comics you have probably aren't worth anything, because they're speaking to that late 80s, early 90s, overprinting glut. And they talk about the fact that Tim Burton's Batman got a lot of people into the hobby. Absolutely correct. It certainly did. It caused a tremendous amount of renewed interest from people that were outside the hobby getting into the hobby. And but here's something to think about. That time frame, 1989 to 1995, there was an aggregate of about 30 million consumers that were regularly buying comics. They weren't buying everything. People had different tastes. Some people maybe only bought Love and Rockets. Some people maybe only bought Sandman. But there were 30 million different people generally buying comic books in those years. So if they have kids and they have nostalgia about what they collected, they're going to bring their kids in, like you see at every comic book convention you've ever been to, nerd parents with nerd kids. And I mean, it's like they're creating that next level of collector. And yeah, it doesn't matter if they're reading today's stuff. They may have nostalgia for their parents' stuff. I mean, I know so many people that have lost parents or grandparents and inherited something that was valueless to the rest of the family, that meant so much to them. And maybe it was like a dog-eared copy of a book that person used to read to them. That's a very, very powerful form of nostalgia. And I'm going to argue, because Shawn makes a difference between nostalgia and history. And I think that's really an area where there's a Venn diagram where it becomes personal history, because you're now you don't love the object for the object that it value it for its association with your own minimum history. So, I'll close with that. I could go on about a few other things and about underprinted comics and census count and how that's bogus, but I think we're pretty much there. So, hopefully you've enjoyed this. I know it was long, but I really felt like it needed to be done. And, I'll probably get in the habit of doing this a little bit more often, and I'm sure people have comments, and, I look forward to having those discussions. So, thanks again, Matt Kennedy, Pop Sequentialism. You can go to the website, which is www.popsequentialism.com. Probably spelled that wrong, but I'm easy to find. Thank you very much.